Hello and welcome to CrypTalk. I'm Ross Sinclair for BizNews.com, and I'm joined by Gaurav Nair of Jaltech. Just a reminder that nothing said should be taken as financial advice, and please speak to your financial advisor. Thank you for taking the time, Gaurav.
Thanks for having me, Ross.
So last week, there was a hack of Binance Bridge, which resulted in a loss of $100 million. Apparently, the attack could have been as bad as $570 million, but that was prevented. What is the Binance Bridge and what happened in the attack?
Sure. So, starting off with Binance itself, Binance is the world's largest exchange. And in the last 24 hours, about $15 billion was traded on there. Um, and the Binance has two blockchains actually. One is known as the Binance Smart Chain, and the other one is just known as Binance Chain. And these two blockchains have various tokens or assets that trade on them. And so Binance has introduced a bridge which allows you to take assets from the one chain and move it to the other chain. Now, what a bridge is not something that's part of a blockchain, that's not built into the blockchain. Typically, if you have different blockchains, a blockchain only knows about the assets that are on its chain. And all the miners, etc., that are on that chain, they keep track of where all the assets are. But they're totally blind to the assets that are on any other chain. And so if you want to move assets from one chain onto another chain, how does that happen? And in essence, what happens is a bridge, a company or a group of people, they create a bridge. And what the bridge does is it takes the tokens that you want to move across and it locks it up on the one chain so that no one else can spend it. And then it creates a copy on the other chain. And this copy that it creates often is, they call it a wrapped version of the first token. And so at this point, the copy only has value because someone knows that if they return the copy to the bridge, they can get the original token on the first chain, which actually has value. And so an analogy is, let's say that there are gold coins in circulation. If gold coins are deposited with a bank, the bank might give people a piece of paper saying, this is proof of your gold coin deposit. And that piece of paper only has value in that someone knows that they can get a gold coin back later on. So that piece of paper is the bridged asset. And so what happened is the bridge was hacked. Now, there are numerous ways in which bridges can be hacked. One way is that hackers fool the bridge into believing that deposits have been made. On the other side, they get these pieces of paper. They either spend them or they try and redeem them and get gold coins out. So that's kind of one way. The second way is if they actually somehow take control of the bridge. So if they control the bridge, then they do either one or two things. They either pull out the gold coins or they just create new pieces of paper and then redeem them for the original gold coins. And so the hack that happened with Binance is that a hacker managed to create, in essence, fake tokens on the other side. And it created up to $560 million worth of tokens. And these were the native tokens of Binance. They're called BNB tokens. And then from there, they then deposited $100 million into one of these DeFi protocols. So DeFi, these are programs that run on the blockchain, and you can interact with them. So often they're made to provide loans, that kind of thing. So someone deposited $100 million of these BNB tokens, the hacker, and then they took out a loan of stable coins. And so they took out this loan and then they started bridging it to other chains as well, to Ethereum, another chain, Phantom, and potentially that $100 million is now gone. People may try and stop that, and they might have some success doing that. So that's kind of what happened with the bridge hack.
So have they made out in cash or purely in crypto at the moment? Is it all in stable coins?
It's currently in crypto. And then from there, I guess the authorities will try and track it down. and stop the hacker from eventually turning it into cash.
I suppose this is why they banned services like Tornado Cash and these other mixing services, because otherwise it'd be easier for them to get away.
Exactly right. So in fact, a previous bridge hack to the tune of approximately $500 million was conducted by what people think is North Korea. And then they used Tornado Cash to hide the tokens and get it out and potentially eventually turn it into cash. And that seems to be the reason why in the US they've now sanctioned Tornado Cash and they don't allow US persons to interact with Tornado Cash.
So the Binance Bridge community, as in the validators, apparently played a big part in shutting down this attack. How did they do it, and what can it tell us about the power of the decentralized platform?
Well, so when it comes to blockchains, the shutting down of a blockchain or pausing of a blockchain shouldn't happen. And so the fact that this kind of thing happened, it makes one scratch their head and saying, is this really a blockchain? And with Binance, there's always been this question of how decentralized is it actually? Is the Binance chain a neutral chain run by neutral parties, or is it in fact just an extension of the company, of the exchange? And the fact that the chain was stopped, the validator stopped the chain while they took some kind of corrective action, and I guess stopped the remaining $460 million from being spent. That implies that it's not that decentralized, and the people that object that Binance is not decentralized, it's really given them a lot of ammo. And one asks the question that, what is the point of this even being a blockchain if it can be stopped so easily?
And how are they looking to fix this problem in the future? And what can other chains do in the future to not have this kind of thing happen?
Yeah, so what's quite interesting is that one should differentiate between the security of a blockchain and the security of bridges. And the security of bridges has always seemed suspect. Vitalik Buterin, one of the founders of Ethereum, has famously commented that he's against bridges. So we have all these blockchains, and they just know about their own assets. And what you have is a number of people, if it is truly decentralized, you have a number of people who are independent. They're all either running hardware, which is running the blockchain, or they've put funds at risk in order to run the blockchain. And for a hacker then to make changes to the blockchain, they need to spend a lot of money either in hardware or these funds at risk in order to hack the blockchain in essence. And that's why you see relatively few hacks of actual blockchains. However, when it comes to bridges, you don't have a variety of people. You generally have a closed group of people who are running that bridge for profit. And so that means that if you attack one company well, like with the Ronin hack that I mentioned earlier, you can actually, the amount of money you need to spend trying to hack that or attack it is relatively small compared to a blockchain, hence why it is much less secure. Also, you have complex programs that are trying to keep track of the assets across two blockchains that it's trying to bridge across. And that leaves numerous places where there could be a loophole or some kind of error in the program that someone can attack to actually then drain the funds out of these bridges. What's happening is definitely with each of these hacks, more and more is learned, and future bridges then potentially close up these gaps. But what we face in this space is that blockchain technology really is about technology of money. And so in the interim, while these systems are growing and there's new developments being made in them, lots of money is actually lost during this process. And sometimes financing criminals or rogue states like North Korea.
You mentioned that these bridges often operate for profit. How do they make a profit?
So typically, if you're trying to bridge $100 across from one chain to another chain, and let's say you're doing $100 worth of Ethereum, you put Ethereum on the one chain, and what you'll get out on the other side is something called wrapped Ethereum on the other chain. and you'll only get, let's say, $99.5 worth. And so that portion is then kept by the bridge as a fee.
Okay, I see. So the Celsius network has been the cause of great controversy recently, in many respects, from the company going bankrupt and locking people out of withdrawing their funds, to the former CEO, Alex Mashinsky, apparently withdrawing $10 million while the ship was going down and publicly claiming that he was hodling. But with the bankruptcy, users' data has become publicly available. What happened with these leaks?
Yeah. So as you said, so Celsius was seen as this kind of neobank. And what it was doing was taking deposits of crypto tokens and paying an interest rate to those investors. And in order to generate the returns, it had to lend out those tokens. And in the process, it lent out those tokens to relatively few parties, so there wasn't much diversification, and it didn't seem to do much in the way of credit checks. And so now that those tokens have been lost, and there's not enough to pay back all the depositors. And so Celsius has now gone into bankruptcy proceedings. And as part of the bankruptcy proceedings, they had to provide a disclosure of who they owe money to. And so they've disclosed in hundreds of thousands of people all of their customers' names, their wallet addresses. So this is the address this is how they interact with the blockchains, etc. A lot of personal details. And apparently Celsius fought back against and tried to tell the court they don't want to provide this information, but the court insisted on it. And so this phenomena where if there's someone has an online presence and then you discover their real world identity is known as doxing. And why doxing is not a good thing is that often people are harassed. So people who are anonymous online, then when other people find out who they are, they end up being harassed. People could show up at their houses if they have their physical addresses. In the case of blockchain, it's even more concerning because with someone's wallet address, you can find out how much money they have, what they've invested in, etc. And so you end up with a lot of information, and those people may then become the victims of crime if it turns out that, this person, they've got millions of dollars. And so this doxing is really worrying. And there's often been a saying, there's a new saying actually, that is that when it comes to private information, you have to assume that any information that's available will be leaked at some point in the future. And so the new standard for privacy is more and more to not store information. Otherwise, it will be leaked. And then it'll be out there for bad actors to use.
So obviously Celsius and all these different things are masquerading as DeFi platforms, but they're not really decentralized. What would happen if Celsius was a completely like blockchain decentralized blank? How would this have played out differently?
Yeah, that's a great question. So if it was a decentralized platform, and there are DeFi protocols out there that do the same thing as Celsius, really, where you can deposit tokens and earn an interest rate, and they then lend out those tokens. And the decentralized versions, firstly, they didn't go bust. And that's because they have a set of rules, and the rules are programmed, and those rules have been battle tested. And there's no way to get around it. There isn't human error in it. And so, in fact, a lot of these companies that did go bust, they also had loans from these protocols, and they made sure to pay back the protocols first because they just could not get around those rules. However, what ends up happening is that those protocols, all the people they interact with, they don't have any of their information. What is a matter of public record is which wallet address interacted with those protocols, but who those belong to, what their addresses are, etc. No one knows that until an event like this, where Celsius ends up doxing all of their customers. And on top of that, there's been a push for more privacy. And so the latest research and technology in the blockchain space is to actually keep the transactions totally private. So in the future, if I interact with one of these protocols, no one will even be able to know which wallet address interacted with the protocol. Um, and so then no one will be able to follow that trail and see just what else does this wallet do, etc. And that's what the push is. And really, one of the reasons is because of situations like this. And so thinkers say, look, privacy has to be the default um, scenario.
Is there any hope for Celsius and other companies like it in the future, or is this the end of them?
Well, I think that currently it's quite difficult to use the blockchain. And so that's the reason, in fact, that companies like these sprang up. Uh, on top of that, they were quite irresponsible. They offered extremely high interest rates, and that attracted a lot of people. Uh, but on one hand, people who can't interact with these DeFi protocols, it was quite easy to interact with Celsius. They're quite used to it. And so, as long as using the blockchain is difficult, there'll probably be companies like this that spring up. Um, However, what will happen in the long run is that as the people who are researching and developing for blockchains, as they improve the user experience, and as more and more people learn how to use these, then they'll just directly interact with the blockchain. People may not even know that in the future. They may be interacting with a website and think it's a company like Celsius, but behind the scenes there's a blockchain, and so then the capacity for these kind of leaks drops away.
So Bitcoin has been sitting quite comfortably around $20,000 since the crash a few months ago. But indicators within the price of Bitcoin, namely the Bollinger's bandwidth, seem to indicate, based on historical data, that there is likely to be an increase in volatility in the future. So in 5 cases where the data has been like this in the past, Bitcoin shed 16% of its value in 20 days. And in another case, it shot to its all-time high. So what do you think is likely to happen? Is 20,000 the new comfort point for Bitcoin, or is it going up or down?
Well, I think it certainly makes sense that volatility is going to be increasing. Other metrics that maybe support this is that more and more volume of Bitcoin are being taken off the exchanges. Now, what this means when there's a small amount of volume on the exchange is that a little bit of buying pressure starts moving the price up aggressively because there aren't tons of sellers. And similarly, a little bit of selling pressure starts moving the price down aggressively. Um, and the fact that Bitcoin is currently been moving sideways mostly recently, it does lend credence to the idea that there may be a volatile move coming soon.
So on top of that, the Ethereum merge, we've seen it spill over into other blockchains, with a lot of the miners who are validating on Ethereum blockchain just moving over to Bitcoin, which has increased competition for miners there. It's made validations more difficult to get, and it's incentivizing miners less to validate on the Bitcoin blockchain. What do you think this will do to the price? Is this potentially going to cause a crash? Is it going to cause a spike? What's going to happen?
Yeah, so one of the things that people sometimes don't appreciate is that as miners move in and there's more miners mining, this doesn't increase the supply of Bitcoin because the protocol is made such that it then increases the difficulty of the problems that these miners are trying to solve in order to keep the issuance rate stable. And if miners leave, the reverse happens. So the supply is still at a stable issuance rate. But what this means for the individual miners as competition increases is that it becomes more difficult to solve a problem and they end up winning less blocks. So this means that their revenue is dropping. Given that the Bitcoin price is off its all-time highs, revenue is already down. And then add to that the high cost of energy due to the war in Ukraine, etc., high inflation, and what you actually have is a perfect storm for miners, where revenue is dropping and costs are going up. So, in terms of effect on the Bitcoin price, generally speculators, when they see the difficulty increasing, it makes them feel more confident in the network. It becomes harder to hack the network. And so it's a good signal for people who are just looking to buy or sell Bitcoin. The buyers then say, well, it's harder to hack the network, it's a safer asset. And that adds to the case to buy. However, for the miners, and a lot of them are listed, this isn't good news. And what you may see is you may see, in fact, some of these mining shares losing value.
So another crypto that a lot of people are talking about regularly is XRP Ripple. Can you speak more to that? What is it?
Sure. So Ripple is a cryptocurrency that was launched a few years ago, and its main use case was to be a payment network. And so what it targets is very, very fast settlement. Um, if you and me were in a transaction and I tried to pay you in Bitcoin, we might have to wait 10 minutes while we make sure that the payment has gone through. Um, and with some networks, it's also unreliable how long you even have to wait. Um, However, XRP, they target very quick settlements and very certain settlements. Um, and so this use case seems to be the primary and easiest use case for cryptocurrency. And a lot of people believe in Ripple or XRP for this reason. However, they encountered some legal troubles quite early on. The SEC in the US has opened cases against them. And these cases have been ongoing for a long time. However, in the recent weeks, XRP seems to be making good progress in these cases. And various aspects of the case that the SEC has been fighting, they've been losing. So certain information disclosures they didn't want to make, and Ripple ended up getting the court to order them to, in fact, make those disclosures, for example. And simultaneously, despite it being a crypto bear market, Ripple has also been securing partnerships in Europe, working with banks, etc., and to be a payment network between these entities. And so all of this has fed into a strong price for Ripple compared to the rest of the market. And generally, things are looking good for Ripple right now based on these facts.
Does Ripple have its own blockchain, or is it built onto another blockchain?
It has its own chain and its own token.
Does it have, like Ethereum, any other technologies built on top of it, or is it just purely for validating transactions?
So I'm not sure what the future plans are of Ripple, but currently its main use case is in fact just being a payments network.
Now, in the Jaltech cryptocurrency basket, besides the main tokens of Bitcoin, Ethereum, and Solana, it's filled with a number of other tokens. Obviously, you've done research and chosen carefully which ones are going into the basket. So what are some interesting ones you've chosen? What are the reasons for including them? And what are some that make the basket more promising?
Sure. So the philosophy behind the basket is to go into the largest market cap tokens. And so, of course, that's why you see the likes of Bitcoin, Ethereum, and Solana. And as and when the the promise in the market increases, you see those going up. However, there are many other use cases. There are other blockchain networks, the likes of Polkadot, which is an alternative way of running a blockchain, and the likes of Polygon, which token is Matic. And so these are alternative ways of running blockchains. And in as much as the existing chains have weaknesses, these chains might be able to address those weaknesses. However, there are other tokens, and these other tokens are the leading DeFi protocols. And so what we have is you have the biggest exchange, really, Uniswap, on there. And it's really proven itself. It's got the biggest amount of liquidity, etc., and it's seen as a blue chip in the DeFi space. You've got the biggest DeFi bank, Aave, on there, which allows people to deposit tokens, earn an interest rate, as well as to borrow tokens by putting in collateral. And then you have the likes of Chainlink. And Chainlink is like an information service. And currently, if you think about the traditional world, in order for people's contracts, they need information. So they might need what's the price of gold if we agree to sell each other or transact in gold at the ruling price, or the oil price, etc. And there are current information services out there like Bloomberg's and Reuters and S&P, etc., that provide this information. Chainlink is the equivalent of that in the blockchain ecosystem. And they do two things. They provide information that is on chain. So maybe what's the Ethereum price? Someone might need that. but also off-chain information. So you and I might get into a contract on the Ethereum blockchain, but we might say that, if it rains tomorrow, then you owe me $1,000, etc. Now, who's going to give us that information? The blockchain doesn't know about it. So Chainlink takes that information from the real world and brings it on chain. And so these DeFi protocols, what you often see is that other protocols that are being built today, they use these protocols either to make exchanges, to generate liquidity, or because they need information. And so these are seen as the blue chips. And if and when the crypto ecosystem starts to get a bit more momentum again, it's highly likely that these protocols will see a high level of usage first.
You mentioned that Polkadot is a different kind of blockchain. How is it different?
So Polkadot, how it works is it has the philosophy that there are actually multiple subchains. And these chains can be built specific for certain apps. So for example, if I've got a blockchain that runs a game, it isn't so important that it's highly secure because these assets on the game assets, which might be like a sword or a gun or something, they're not high value. And what's much more important is that the transactions happen quickly, right? If an enemy dies and a sword comes out, we can't wait 10 minutes for that to appear in the game. And so you could have a subchain that then processes very quickly, but isn't very secure. On the other hand, you might have another chain where you have financial options. And so Polkadot, it provides this chain that allows all these subchains, and it provides the ecosystem for them to then all run and get security in one place. Normally, if I launched a chain for my game, I'd have to create the security for it. The security being either mining or staking, etc. Whereas Polkadot says, okay, we'll provide the security for all these subchains.
And besides Ethereum and Solana, which have NFT protocols built in, is there any future that you'll include something to do with NFTs in the basket?
So definitely. I think that when it comes to NFTs and any new technology, really, what we want to see is we want to see that something has already stood the test of time, that it isn't just a flash in the pan. Because if its market cap suddenly goes up and we buy into it and then it crashes, we've really bought high and sold low. And what we want to do is the opposite of that. So what we want to see is we want to see a protocol, whether it's NFTs or anything else, we want to see it gaining adoption and for that adoption to continue. And so many of the metrics for tokens to be included in the basket are, in fact, that something needs to have a certain market capitalization for a long period of time. We then know that, okay, this in fact is something sustainable, and we include it in the basket. Some people object and say, but geez, at that point, you've already lost all the gains. It might have already run. But when it comes to crypto, these are really the early days. And if one of these protocols like Uniswap or let's say a new NFT protocol, if that's added to the basket, if Uniswap replaces all the stock exchanges in the world or many of them, well, then its volumes today is nothing compared to what it will be. And so this approach is kind of the more prudent approach, but there's still a lot of growth to be had.
Fantastic. Well, to learn more about the Jaltech cryptocurrency basket, click the link in the description below. Thank you so much for taking the time, Gaurav.
Thank you, Ross.